Not all market hours are equal. Some sessions are designed for movement while others are designed for track. Welcome to this amazing video. My name is Philip from Coinlinity, and in this video I am going to break down session-based liquidity model and how institutions trade around specific liquidity windows. And I need you to pay maximum attention, put away every form of distraction so that you get the best out of this video, because I'm going to be covering a lot you need to understand about liquidity windows and around institutional levels. So we're going to start with session-based liquidity. All right, what does session-based liquidity really mean? Now, when we talk about session-based liquidity, it's actually liquidity, or what we call money, because we know that liquidity is money. It is about when liquidity enters the market, not just where price is. All right, so we want to know when that liquidity enters the market, and that is why it is session based. All right, because during that session we know that money is entering the market. Now we know that the forex market runs for 24 hours, but liquidity is concentrated around specific sessions, and the institutions understand this better than the retail traders, and that is why they make more money than the retail traders. Now when we talk about institutional liquidity, all right, I need you to understand that the institutional traders do not trade randomly throughout the day. All right, they do not do that. They execute around session opens or session overlaps, or around high volume windows. All right, that is where they operate on, and that is where they execute around. Now, why do they do this? They do this because that is where liquidity exists. Like we have established before, session-based liquidity, they execute between these session opens, between these session overlaps, and these high volume windows, because that is where liquidity exists, and without liquidity large orders cannot be filled efficiently. Now, the reason why institutional traders do not trade during low liquidity period is because during those type of period, price is easier to manipulate, or rather consolidate. All right, but it is either it is manipulating or it is consolidating. Now, if it is manipulating, you see things like false breakout, stop hunts, and choppy price movements. All right, so this choppy price movement can determine the consolidation or accumulation of orders, and then you might see a false breakout or stop hunts happening around that period. But during high period of liquidity or high liquidity windows, price becomes intentional. It is going to be moving to the direction which it is supposed to move to. The moves are going to be cleaner, the directions are going to be clearer, and the inefficiencies will get filled and corrected, and price will move in a more suitable manner. Now, when we want to trade around institutional liquidity windows, most traders get this wrong. All right, they do it the wrong way. They trade anytime price move. Now, that is not how you trade within institutional liquidity windows. Just because price is moving doesn't mean you should open a trade. Now, the institutions trade when liquidity is present, and they know when liquidity is present in the chart, and we are going to talk about that in a minute. But now, the goal is not to be in the market all day. All right, the goal is to trade during the windows where orders get filled, stops get run, and the real direction of the market is actually reviewed. Because if all of these things have been done, then the moves are going to be very clear, and you'll be able to see the direction of the market very, very clearly. Now, if you want to understand more about this, you can actually go for our courses or our mentorship, because they will help you understand the timing of the market and the institutional liquidity windows at a deeper level. So if you are one who is interested in taking our courses or mentorship, you can actually use the link below this video to get started with our courses or with our mentorship. Now, when you want to use session-based liquidity or session-based model, all right, you need to study the session highs and the session lows. You need to study session accumulation, all right, pre-session accumulation or post-session expansion. Now, what we professionals do is really, really simple. All right, usually we wait for liquidity to be taken from one side, and then we follow the real move. So if I was bullish on this particular pair, or bearish on this particular pair, rather on GBP/US, if I was bearish, I would literally wait for liquidity to be taken, then I'll follow the real move. And how do I know what liquidity is taken? This indicator I have over here is actually displaying the type of sessions we have and the liquidity or the moves during that session. Now we know that liquidity rests above highs and lows, and this is how you track your liquidity using session highs and what session lows. Like I said earlier, professionals study session highs and session lows. They also study pre-session accumulation. Now, one major fact is that during the Tokyo session or the Asian session, price usually accumulates. So if price is accumulating during Tokyo session or the Asian session, we want to wait for a manipulation during London or New York, and then we follow the real move. As you can see how the Tokyo session is being manipulated during the London session, and then the moves goes what down. The same thing over here. You can see the Tokyo session. You can see how London trades above it, and then during New York we start moving lower. So this is how you can actually understand how to use session-based models by waiting for liquidity to take out a session high or a session low, and then you wait for the expansion to move in the correct direction. Now, this is where your patience is going to replace over trading, and this is how your structure should meet your timing in the foreign exchange markets. Now, if you want to learn more about this, you can actually subscribe for our 5-day free Forex training program currently ongoing at CoinNT. You can use the link in the description below to save your spot. Sign up, save your spot so that you do not miss out on this 5-day free Forex training program. Trust me, it is going to be educative, it is going to be informative, and you do not want to miss out. If you found this video helpful, and if this video have helped you see the market differently, please do subscribe to our social media handles on Facebook, here on YouTube, on Instagram, and on TikTok. And do not forget to click that notification bell icon here on YouTube. And if you want to trade alongside other serious traders who understands timing and liquidity, then you can actually join our Telegram community by using the link in the description below. Remember, guys, do not chase price, just trade your session and follow the liquidity. And until I come your way again, remember to trade well and trade safe.